As Tesla investors, we often appreciate hearing from institutional investors to learn more about the investment thesis. Today, we get the chance to speak with a portfolio manager who's managing over 300,000 Tesla shares. How does he value the potential for autonomous ride hailing, the potential for the Tesla bot, and all the other promises of new products? How does he manage the ups and downs that come with an Elon Musk company? Simon Hale is a senior wealth advisor for Wellington Altus Private Wealth, which has $30 billion under management. They manage investments for wealthy families in North America and abroad. Simon was named one of Canada's top wealth managers, and his firm is rated Canada's top wealth management firm for the past 4 years. Welcome, Simon. Thank you for joining me.
Thanks for having me, Herbert.
So I've really enjoyed getting to know you, and I'm excited to share you with the rest of our Tesla investor community. You are, I find, to be a very refreshing investment thesis in Tesla, different from the other institutional investors. So I guess the first question is, what is your investment thesis for Tesla? What is it that you see, and how do you, and why is, we'll dive deeper, but why are you so different than other institutional investors?
Well, if I go back to our history of investing in Tesla, we were earlier investors on the announcement of their Model 3, and we ran some numbers and we said, wow, this has the potential to be $1 trillion company. We learned through that experience over the next few years, it was very difficult to own the stock, and we did end up selling out of the company when the stock went to almost 420 on that tweet. And we decided not to get back into it for a while. We missed the big run up, the 10x in 2021. But the reason, and the reason we were passing on it was because we managed portfolios for retail clients, and we own usually a basket of 30 to 40 companies in our portfolios. And Tesla had gotten so much attention, despite the fact it was a 2 or 3% weighting. All of our clients only wanted to talk about Tesla and what they heard about Elon on the news. So it was very difficult to manage a business and manage the client's emotions when there's one company in that portfolio that seemed to get all the attention. We also were reading many of the Wall Street analysts' reports, and we rely on those reports in order to do some of the heavy lifting in terms of the fundamentals, or if you want to look at the economics of businesses. And at the time, there were many, and there still are today, many Wall Street analysts were quite bearish on the company. So we really didn't put a second look to it. But then the stock ran up. And I think the reason we look at this a bit differently is that the information, what I decided to do is that, you know what, why are there so many people that are heavily invested in this company? How did the stock or the market cap go from 50 to 80 billion to 5, 6, $800 billion to $1 trillion at its peak? Is everybody crazy? Because there's people in Wall Street saying the stock is worth $10, and there's people that are saying that it's worth $300. And I said, you know what? Why don't I just gather all the information, actually do the work. And I started listening to some of the forums that you're on. I started reading more about and paying attention to who are the top analysts and who do they have working for them. So you look at JP Morgan and Adam Jonas, and it's not just him, but he's got his whole AI team that he can rely on and get better information. And I'd use TipRank to actually understand how good are these analysts' calls. But most of the information I started to get from was actually just retail investors that were doing so much research. I mean, you go on X and you find people keeping track of, that have drones that are flying over the factory that are counting how many cars come out of the factory on a daily basis. And they're gathering this information from factories in China and factories in the United States. And I realized that you can get more up-to-date information on this company, I believe, than any other company in the world. It was so transparent. So that's when I started looking at some of the models that people had published. And then we started just do our own analysis and say, do these models make sense? What are the probabilities that they solve autonomy? Well, I'm not sure. So I should go off and buy a Tesla and try the full self-driving to understand how quickly it's evolving. which we did. But I would have to say the difference is that where we were getting our research from changed from the standard Wall Street analysts to a combination of some highly ranked analysts and a combination of retail investors coming up with their own assumptions, and then us deciding to make our own analysis and say, okay, does that make sense? Does that make sense to you?
Oh, I love it. I'm so glad that you did that because obviously we know that a lot of people aren't doing what you're doing, but you specifically actually bought the car. You actually know FSD, so you are touching it, feeling it, very much like that. What do
And
you think?
instead of, sorry to cut
Yeah,
you off, and and I think the reason we could do that is we have many, many years of analyzing businesses. So I said, why are we trusting everybody else? You know how to do this. We have a good track record for managing investments. Let's do the work and actually figure out who's right here. Are all these
yeah,
people suckers for buying into this stock that's going up? They can't all be
yeah,
suckers. And when you start listening to them, and you start listening to Jeff Ludd's on here and Tesla Boomer, like really smart people.
yeah.
I was on a forum last night on X, and I listened to these guys, Whole Mars Cattle, like these guys are
Hmm.
really smart. And so beyond my capability, I just read the numbers, put things together, and say, okay, this is pretty simple of how much money I think that this company will be worth, based on what Wall Street and investors are willing to pay for those future cash flows.
Hmm.
Right. So for me, that part's simple. That part's simple. But some of the work they do in understanding the microchips, and how many nanometer chips are going into this, the dojo versus the NVIDIA chips, and trying to learn about inference and training, and that's pretty complicated stuff.
Yeah, you're absolutely correct. I mean, the access to just incredibly brilliant analysts, retail analysts, we call them, are incredible. So, what do you think? What will it take for the institutional firms who are just sitting on the sidelines? Are they doing that because Elon Musk is a key man risk? Because he is, it's just an up and down. We don't know what's going to happen. It's kind of too unpredictable, or is it because they actually don't believe the story? What will it take for the institutional investors to start investing more?
Well, I think first, the institutional investors are covering a lot of companies, and they don't become experts in just one company. So I think some of the retail Tesla analysts are at an advantage because that's all they do. Um, in order for them to, so I think a few things would seriously drive the stock. One, there's short sellers. It's not a lot. I mean, it's been heavily shorted in the past. But when this stock eventually takes off, you're going to get some short covering, and you'll see some short covering, and also that'll push up the stock. I can't for the life of me understand why anybody would want to short this stock.
Hmm.
There's got to be better ways to make money, uh, or easier ways and less risky ways. Why
Hmm.
bother? I don't know. And I wonder what they're looking at. And I've read their research. What are they looking at? And it never makes sense when these short sellers say, "Well, the stock is worth $80, and here's why," or $20, because and they explain that the cars have this value, and the competition is coming. I'm going, well, what about the value of FSD and compute and robots and all that? So what would it take? It's under-owned, so understand that. It is in the benchmarks and it has its proper weight. But because it's under-owned, eventually, when the value is recognized in Tesla, and I'll get to when I think that would happen, eventually, because they're underinvested, they would need to bring up their weighting in the portfolio so they don't underperform, right? I mean, if Tesla goes 10x's over the next 3-4 years and you don't own it in your portfolio, you're underperforming the S&P 500. And portfolio managers, that's they're trying to benchmark hug, and they don't want to seriously underperform. They don't mind underperforming a little bit, and they need to keep proper coverage. So that would drive the price. That would be another leg that has nothing to do with just the value of Tesla. It would be institutional portfolio managers trying to get a proper weighting in the portfolio, kind of like we're seeing now with NVIDIA. What would see the company what would change their mind in terms of institutional investors?
Mhm.
Um, I think they need to see the numbers. Some would argue otherwise. If I think the best example we have today of the most recent, hyper growth company that has 10x was Nvidia, gets all the attention today. Um, and so we've owned Nvidia for a number of years. It hasn't been easy.
Mhm.
And if you look at the valuation of Nvidia through 2022, as the stock went down over 50%, it was expensive. And many analysts were saying it was overpriced. We even hesitated and said, is this relative to interest rates? Should we
Mhm.
own this company considering how pricey it is? And thank God we decided to hold on because
Mhm.
they are the best at making the chips. But so what changed? And if you listen to Jensen for the last 3-4 years prior to 2023, he's been talking about artificial intelligence and trained models. I've listened to the NVIDIA calls in the past before it was, everybody had to own it. I thought they were difficult to understand and sometimes would put me to sleep at night, to be honest.
Mhm. Mhm.
But he did talk about this stuff, and he said, this is where we're going. He
Mhm.
talks about how, eventually it's going to be just training and inference all at once. But he's been talking about this for years, but the stock never really rallied as a result. The only time it started to take off was when we actually started to see the numbers. So every quarter, all the analysts are going back after they come out and they say, look, we just made $10 billion on these compute chips, on these AI chips, and $20 billion and 30. We foresee doing 50 billion. And so the analysts go back and they change their models and they basically do a DCF, and they look at the cash flow out for the next few years and they say, wow, well, here's our new valuation. And so I think also that's what creates some of the volatility in Tesla is that if you do the numbers backwards and you say, okay, in 5 and 10 years you've got these targets. Move my hand here. You've got a target of, here's the FSD revenue. It could be this, or it could be this. And then you draw a line of what that discounted cash flow looks like, and
Mhm.
it changes the stock price significantly. You could have if they solve full self-driving, in the next 24 months, which I think they will. And then all of a sudden the analysts start drawing that out for the next 10, 20 years. There's one or two analysts that are, I think that Tom Narayan from
Mhm.
RBC
Yeah.
Capital Markets,
Yeah. Mhm.
he does a really great discounted free cash flow model, and he's very conservative when it comes to, I think he has a price target of $300. And if you read through his report, and you got to read the guys that have positive reports and negative,
Mhm.
and then
Mhm.
come up with your own conclusion as to what your thoughts are. And when I read the reports from, let's say, the ISI analysts, the ISI has an excellent analyst, by the way. I love their research. Their Tesla analysts, not so great.
Mhm.
But I read it and I say, okay, I disagree with it. They're missing this, 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 and this. And then I read Royal's, Tom Narayan's report, and I go through and I say, wow, $300 price target based on 2035 future cash flow. Okay,
Mhm.
now he's doing the work. And then you look at the underlines, and he's really conservative. I'll go over a couple, because I think a lot of people in these spaces are actually
Mhm.
pay attention to these cash flow models. But he has a price target of, like I said, $300 present value. He says based on today,
Mhm.
and the stock today is what, 180, depending on
Mhm.
the minute. Um, and he's basically modeling out the FSD, and he's got next year FSD pricing at $50 with an 18% or 30% take rate, because it appears they're going to solve it next year. And basically going forward, he's saying $50 a month. That's how
Mhm.
he priced it. And right now, as
Mhm.
we know, FSD is 100, and maybe it increases in value. But he has the take rate quite low, even on the non-Teslas, and that's where I think the significant value is. is when you go into, when Wall Street wakes up to this is when, let's say BYD, or
Yeah.
I think it's going to be in China first.
Mm-hmm.
They sign a licensing agreement. They're going to be the first. Then it's going to be similar to the supercharger agreements.
Mm-hmm.
But it's going to take time. China will be quickest to move because they move their auto manufacturers move very quickly, and they could get this hardware on the cars quite rapidly. Not in 3-4 years. They could probably do it in a year or two. And then you'll start seeing, and they can start modeling this out, and they say, okay, well, what's the growth rate of licensed FSD? And they'll put some assumptions in there, and they'll say, let's say there's 80 million cars being produced every year, and right now the take rate is, I don't know, 2%, but we're seeing growth rate of that by the take rate increasing by 50% per year. They can model that out. And I believe that's what's going to make the difference. And then every quarter, when they come out and say, here's who's licensed it, here's the revenue, and you can actually prove that that revenue is increasing sequentially. Right now, it's sort of pie in the sky, not proven. There's not really, they don't even break it out in terms of how much revenue comes from FSD. We're sort of guessing what the take rate is. But I think that is what is really going to change Wall Street. And you can't, I don't think you're going to be able to just not be invested in this company and then all of a sudden wait until it's solved and
Right.
then buy into it. It's going to be one of these things that, the stock's going to move 20-30% as soon as people realize this. And then it's just going to start running. And I think it'll be similar to a 2021 10xing, as all of a sudden it catches up and it says, why was this company a $500 billion market cap? Should it not be, $2 trillion for starters?
Okay. I love the way that you walked us through that. I do like Tom Narayan, RBC Capital, like you said as well. So, two of the major, people that Tesla retail investors have been following on X for a while, it was Ross Gerber and Gary Black. And because they, before we've, had you come on, just found you recently and wanted to give you this platform because you are like them in that you can translate how institutional investors think. But you're also very different because they are they're both also portfolio managers. They manage people's wealth, but they get a lot of pushback from their wealthy families and wealthy investors. And that's why big part of the reason why they both sold quite a bit recently. How do you handle that? I'm sure you're getting pushback. I'm sure there's a lot of families that are calling you investors and saying, what are you doing? Because they just read the headlines. And we know from X that many of these are all crap and false. By the way, I didn't tell you this, Simon. Just before we started this interview, I got a reply from Elon Musk. I, basically retweeted a CNBC episode saying that Trump has offered Elon an advisory role. Elon replied saying,
I just watched it at lunchtime, actually. Yeah.
okay. Well, he just
And he
replied
responded?
the minute before we did this interview, and he said, this is false. Okay, he's never spoken to Trump about anything like this yet. So,
Yeah.
I mean, there's just so much false news, and your investors must be hearing that. What do you do? How do you handle this? Because these other two people that I mentioned, Ross and Gary, they've sold a lot probably because of that reason.
Sure. So for starters, I think I've tremendous respect for what Gary does and what Ross Gerber do. Ross is fantastic at promoting. I find him highly entertaining. I mean, I've sat and listened to him sometimes and just cracked up in my kitchen watching some of his interviews. So he's great at that. And I have to say there's many ways to be successful at investing. And I think the way Gary's method is more looking at I wouldn't say the fundamentals. I would say looking at the economics, the current and foreseeable economics of businesses. And I think that's what a lot of investors or portfolio managers, institutional investors are doing. And I don't think it's wrong. It's just a different way. There's many ways, like I said, there's many ways to profit and make money. And I think that they're staying in their lane of competence, and that has served them well. Gary hasn't been wrong. I don't want to. I won't mention what I feel about Ross Gerber. So I don't even know what to. It's let's not go there. But in terms of Gary Black and his calls on Tesla, he really wasn't wrong. He said, "Look, it's a weak car market. Look, interest rates are." I mean, I don't agree with him thinking that Tesla should advertise because that's what he thinks. Our philosophy is, if you invest in a company, you need to trust management, that management knows the best thing for that company. They know their business better than anyone else. And that's our policy, not to second guess management. But other than that, his calls haven't been wrong. I mean, it's been extremely weak auto sales market. He sort of looked at the catalyst and says, this is what's going to move the stock. The catalysts unfold and the stock doesn't move, and he's lowered his position. He's also saving face in front of his clients. So did he do the right thing? Should we have lightened up our position? That's just not the way we invest. And so how we manage clients' concerns, we do two things. We try to educate our clients in terms of our investment philosophy, and hopefully they'll understand that and be comfortable. And we always say our clients are hiring us because of our thought process, not because of what we own or our track record. They're paying us money to have a specific thought process that can cancel out most of the noise and understand the true fundamentals of a business. So, and the way that we think of that, and why I think it's a bit different than just looking at cash flow models, and we do pay attention to those things to understand what's the value that we're paying for this company, but it's not at the top of the list. So many years ago, as I was getting into finance, I looked at some of the greatest investors and I read as many books as I could. And some of the investors I had tremendous respect for were the ones that were able to identify businesses that became truly great. And then I tried to understand what made businesses truly great. And then we take that and we try to apply that in terms of what's important when we're looking at businesses. So first and foremost, all great businesses have a great leader. And you have to look at not his personality, but what is his track record. So whether we own Bank of America and we're looking at the CEO since 2011, when he came in, we said, where was he managing before? What was his track record? Did he have that magic touch to deliver value to shareholders, not to the board, not to his bottom line, but does Jamie Dimon produce value for shareholders? Well, yes, he has, and he's proven to do so. So we look at the manager and say, do they have that magic touch? And then what's really that's what's most important. What's second in line is, does he have the ability to get the right people on the bus? And if you can have a great leader that can get the best and the brightest on that bus, and you can get them all rowing in the same direction, that's a combination for tremendous success. And after that, the cash flow and whatnot, it ends up taking care of itself. The third thing is you need to understand that you're in a growing market. So the worst thing to do is invest in a company that is in a specific market that's not expanding. So we try to look for businesses that are in markets already that are expanding. Very difficult to make money. We always say very difficult to make money if you're the best company in a shrinking market. Very easy to make money if you're a mediocre company in a growing market. And so we're trying to identify the best companies in an expanding market. So then once you can do that, then you can extrapolate what's the product that they make. And that's where the due diligence comes into looking at what the Tesla does. Is their technology the best? Is their infotainment system the best? Is their battery? And that's where I rely on the Tesla community to get the information on 4680 battery ramps, and understanding what's the difference between CATL batteries and LG batteries, and understand where is Tesla with their technology and how they're integrated, and what does the heat pump do. Okay, let me drive the car to Mont Tremblant in the middle of winter and see how
Mm-hmm.
much battery loss is there. And then I'll borrow my friend's F-150 Lightning and take that for a drive and see are they really that far ahead. So that comes down to the actual the product that the company is doing. And we've done this in the past with Apple products. Early on, we just said everybody complains, and this because you got to think of Apple, 10, 15 years ago. Everybody said that because when it was a $300 billion company,
Mm-hmm.
they were arguing that the market cap was so big that it couldn't get any larger, and it was in a bubble territory. And then they complained that they weren't they weren't replacing the phones enough because the phones were too good, and that the CEO wasn't running the company properly. Like all the same things you're seeing with Tesla, people would comment on. And then, but if you just looked and says, okay, do they have the best product? Yes, they do. Are they executing? Yes, they are.
Mm-hmm.
So, get rid of the FUD. So then what we do with that, and that's our analysis of basic how we're coming to the understanding of what a great business is, and we've identified Tesla as a great business. One, like I mentioned, we try to educate our clients as to our investment philosophy so that we hope they're on board with us. And we do that by we host a monthly call with our clients. We talk to them on a regular basis. And we also write a monthly newsletter to explain what we're looking at, what we did right, what we missed, what we got wrong. And we try to be extremely open and transparent. And we think, and so far, I think we've been pretty good with it, but we also think that protects clients from the danger of selling investments when they're down. We always say, like, we've never owned we never owned an investment that went to zero.
Mm-hmm.
And we think that of the 30 companies in our portfolio, I don't think there's risk in any of them. The only risk is that our clients may get concerned or scared when we go through a bear market or some kind of downturn and sell at the worst possible time.
Mm-hmm.
So it's our job as the investment advisors and portfolio managers, I believe, to try and educate our clients before that happens, so that when we go through a big pullback, let's say the beginning of the pandemic and the markets went down 30, 40%, that we can say, look, here's the business that we own. You use this product. I use this product. Just because the stock price went down, you don't own a benchmark. You own a company. And, all these things don't matter. If you're looking at, go back to the Apple example, in 2012, you owned Apple. Over the next 10 years, it didn't matter who was the president, where interest rates were, what happened in China, what happened in Europe, whether the euro went bankrupt or not, even at the financial crisis. None of that mattered. The only thing that mattered was that you owned the business and that they continued to execute in the environment that they were in. And so we're trying to educate our clients on that along the way. And then, to your point, what do we do with Tesla? my brother works with me, and I find it's a company that gets a lot of attention.
Mm-hmm.
I think there's more things happening within Tesla than any other company we own, which is pretty exciting. And we try to educate our clients on a regular basis as to what they're doing. So almost every second month, we talk about, here's what Tesla's doing, here's their business lines. We try to explain that it's not just a car company. It's actually, here's the battery. We actually own a company called Northland Power, and we're showing that in Canada, they just built out the largest, in Ontario, they're building out the largest energy storage in the country. And then, interestingly enough, they're mega packs put in there by Tesla. And so we can explain that, look, this is not just a car company. These are really smart mega packs they're making, and here's the cash flow from them. So I think our clients now, whenever we're talking to clients, they've stopped being concerned. They say, I'm not worried about Tesla. You've explained it. We get it. We're good. You don't need to sell me, Simon. That's kind of what I get now. And I think the clients that were extremely uncomfortable, that we had a lot of pushback from, eventually left. And when we got into Tesla, we understood, and we're talking, I think, two clients. I thought even if we lose a few, it was worth it to own the business, because we would be able to create more value for clients long term owning this business. And I'll actually take you back a step, is that before we got back into the company, and after I did the research and listened to the Tesla community and did more research and came to my own conclusion that this was a phenomenal investment, I personally started buying a lot of shares. And I started to accumulate a position. And I'm following the company. And after maybe 6 months, I keep talking to my brother, my partner, about this. And then we came to the conclusion, and I said, look, it's almost $1 trillion company. Our clients are paying us to do the best work possible. Who are we to tell clients they won't have the stomach or patience to hold on to this investment? They're paying us to make the best investments possible. And here I am on my own buying this because I believe it's the best investment, risk-adjusted investment that I can find in the market long term. And why we're doing our clients an injustice if we're not doing the same thing for our clients. And we thought at the time that, well, it no longer has risk of bankruptcy. The company is earning tremendous cash flow. It's a household name where there's cars on the street everywhere. They've gone through production hell. It's one of the largest by market caps in the world. Their balance sheet is one of the best I've ever looked at. I don't see really any risk. It's just the risk of some volatility. We thought our clients were ready for it. And now they're educated. We don't get a lot of pushback, but every once in a while clients will send us new money. And I got an email the other day from a client that says, hey, we're paying a dividend from our corporation. Just, put it to work for me. You mind not buying more Tesla, please?
Yeah.
And I think it's because they look at their portfolios and they've got, 29 companies that show a profit, and one company, Tesla, which we talk about quite a bit, doesn't. So it's difficult as an investor to see that and say, well, I'm not making any money with that.
Mm-hmm. Yeah, that's what I was gonna, ask you about that, because at the same time, you've got the last 3 years, the stock has been flat or fallen quite a bit, and that's weeded out a lot of people who, can't wait, they can't stomach it. At the same time, ride hailing and FSD is almost here. And so, what's unique about you is that you actually personally bought it as well. You have your own conviction, and then you actually have the car because you wanted to double check and make sure, personal experience and researching as much as you can. And then you also have experience full self-driving, right? So tell me about your perspective of full self-driving for ride hailing, the Robotaxi on August 8th. Is this going to be, what's your expectation of what's going to happen?
Sure. So August 8th, there's so many forums and people are talking about their predictions. I know we all like to make those predictions. Let me start with an interesting story, and then I'll go into the Robotaxi and sort of my hopes. I wouldn't say my predictions, but my hopes. So there's a joke in my office whenever a client calls to get money to buy a car. They say, oh no, Simon's going to sell them another Tesla.
Yeah.
And so I went to one of my kids' friends' birthday parties yesterday evening after work, and it's a prominent member in Westmount community. And I've been talking to him for the last. He's very analytical, extremely bright guy, and I've been telling him how amazing Teslas were, and he told me, I go, hey, whose car is that? I seen a Model S there. It's quite nice. I love that color. He says, no, it's mine. I just got the Model S. I said, oh, really? He goes, yes, thank you for convincing me. I finally got one. Been in there 3 months. And he almost fell off his chair telling me how amazing it is. He said, Simon, I had no idea how amazing this car is. I've never owned a car this good, and I don't think I ever will in the future. Like, he was falling off his chair, giving rave reviews. And what I thought about this, because Jeff Lutz was mentioning about net promoter score of Tesla, and I think that's important to articulate to clients. And I think that I think that's one thing that is underappreciated in the market is the percentage of people that buy a Tesla and that never go to another brand.
Mm-hmm.
And I don't think that's talked about enough, is what the retention rate of for Tesla owners is. You'll get a few people that decide to, go and try something, or they want something different, something that looks different. But once you get into that ecosystem, it's kind of like you're in an Apple ecosystem
Mm-hmm.
or your
Mm-hmm.
Google ecosystem, and it works really well. And you say, I don't want to go anywhere else. So that was an interesting story that he just was flabbergasted. He said, I should have done this a long time ago. And he could not believe, how great that car is. In terms of the Robotaxi, I mean, I've heard, I'm trying to make an analysis on what I expect. I don't have big expectations. I found in the past, and I think I've just been, I wouldn't say disappointed, but there was times where they come out with look at the Cybertruck rollout, right? Everybody was really excited about that. And I know why, I understand that they didn't have the battery capacity. There was, that whole pandemic thing got in the way. And they needed to, and it made, and from an economic perspective, it made so much more sense. You had so much demand, almost unlimited, for the Model Y and the Model 3 through the pandemic and towards the end until interest rates went up. Why would you take batteries or resources away from those highly profitable vehicles and move it into, ramping up a totally new vehicle? I get that. But I'm just wondering, in the back of my mind, he was obviously working on this. Was it always going to be 8.8? Was this let's shake up those short sellers and we're going to move this forward? I think I read, was it in the book, about how quickly he said we need to get a pickup truck to market, and I think he gave them, he said, hey guys, get a pickup truck in 3 months. Am I right on that?
I don't remember exactly the 3-month thing. No.
Yeah, and it was very, very quickly put something together. We're going to launch. We're going to do an event in 3 months, and they did it. And then you look at the initial Roadster when they came out with it. I mean, they rolled this thing on a stage, and it didn't actually work
Right.
at the time.
Yes.
And then they went from there, and I just hope that's not what they're doing. Because how far along are they with their production lines for the Robotaxi? So I'm excited about the full self-driving and its evolution, and I think that's happening record pace. And I do think that we're going to have, my prediction, and I've said this to our clients, I said within 24 months we're going to have Robotaxis somewhere in the world. And my prediction is going to be China first. And because they're very open to that, they have horrendous driving records in China as well, and they're open to technology and using technology. And then we'll start seeing it rolled out in some cities one by one. So I think they're going to show a prototype. Like he said before, prototypes are easy. Making cars at scale at a profit is very difficult. And because this is a new vehicle, I think we will see the prototypes. I don't believe we're going to see the Model 2, whatever it's just going to kill the demand for a Model 3. And I actually don't think they need, I'm looking at the way that they're driving down costs. And from what I understood in the last earnings call, is they want to implement some of the manufacturing efficiencies which they've learned through the unboxing process, and they could implement those into, let's say, a Model Y lineup, eliminate some of the higher cost items, and they could actually bring the cost of that car down by another, I don't know, you'd have to run this by Jeff, but maybe 20%. And then you put the tax credit on top of that, and you're pretty close to a $25,000 vehicle, right? So I don't know if it's even necessary at this stage to be pushing for that. My thoughts, though, on the Robotaxi and why it makes sense is, if you're able to ramp up production and they can do it successfully, get to, say, 500,000 Robotaxis, which they will either license or own themselves, and then let's say in the first year, 250,000, next year 500, get to $1 million, and you start look at the economics. And the economics, these things are just going to print money, right? And I think if they sell them to fleet managers, which makes sense because then they can unload the upfront cost, and then they also have somebody that's going to manage the cleaning of the vehicle and the charging and whatnot, and they're just taking a commission, so they actually get their capital back from the sale, and then after that, it's just printing money, right, from the software. And I think there will be two. There's going to be two versions, meaning you'll be able to use a Robotaxi app, which may be on its own platform, and maybe that has its own cost. And then you'll also, and on that front, it may just be, it's free. Everybody, put it out to everybody's cars. It's free when you're on the Robotaxi. We're just going to take a 50% cut. And all of a sudden that opens up every car on the road. And then if you want to have the FSD, that's a separate licensing. And that you still have to either purchase for 10,000 or I'm not sure what the price is today, or the monthly subscription. But two separate models, because one, you could drop it to every car and people would automatically use it. Well, if they wanted to. I know we have 2 Teslas at home, and I would probably send one of them out during the road just to test out the technology, right?
Yeah, I love it. Good analysis. I appreciate that you put it out. I think it's very conservative when you say 24 months, and that these are your hopes, not your forecast, because it's hard to forecast these things. And you pointed out the risk that we've had in the past about being too optimistic. But you yourself have been trying out full self-driving, so you know that that's progressing, and it's now a matter of business model and how it's working. So it's very exciting. How are you looking at Tesla Bot? So now that one is still very much early, right? We've got a Gen 2, maybe we're heading to a Gen 3. Elon did announce and say that hoping that some number of Tesla Bots will be sold to customers next year, 2025. And then a number of the Tesla Bot team members, the AI engineers, have said that it's actually already in a factory now. Giga Texas, very likely, or maybe Fremont, and they're actually, using it in real production line, but just for testing purposes first. And then maybe by the end of this year, it'll be fully actually working. So in one way, it's early, but in another way, it's actually not early. This is actually these comments are showing you that it's actually production by next year. How are you looking at Tesla Bot?
So it's important to understand that whether the Tesla Bot, they sell it, or actually, so I think there's going to be 2 stages for the sale. There's one, I believe they'll sell it to, let's say what they did with the semi. They officially sold them to Pepsi, but they weren't really selling them to the public. They were selling them to a third party to actually test them. And it allowed them a controlled environment to understand what works, what doesn't. And then from a few years later, we're starting to see them sell to the retail, or to open up the market. So I think it'll be something similar to that they'll put them in their own factories. They may have an agreement with 1 or 2 other companies. And the reason they'll want to do that is that they'll also have them learning in those factories, and then taking the information and increasing them. And once it gets to the point where, and at the same time, they're going to be learning how to ramp production, because the demand, once they get this right, the demand is quasi infinite. So you really need to work on those lines and say, how do we build the machine that makes the machine that can scale when the time comes? So I think they're going to be doing two things at the same time. They're working on a production line, and they're also going to be, they have to be modifying and improving and developing the Optimus along the way. So our view is on future cash flow. This is why it doesn't matter whether it's this year, next year, or even the year after. You have to look at Optimus 10, 15 years out, and then say, what's the profitability of this? And it's just bonkers. And So all that matters is they actually solve it and do it right. Why do we? So we actually believe, and I've been watching videos of all the other companies that have impressive robot technology, and but I actually think that Tesla. Remember, Tesla is the best manufacturer in the world, and the same rules apply to manufacturing vehicles. That prototypes are easy,
Mhm.
manufacturing at scale profitably very difficult. And
Mhm.
we've seen that with the auto industry, that there's no other company apart from maybe BYD that actually makes a profit on their EVs. And Tesla makes a tremendous profit and sells them at quite a competitive price. And they're able to ramp production, and they're able to they figure out problems that other industry experts can't, and they have the best people on board to do it. So the combination of the same combination that allowed them to be so successful in automobiles, having a great leader, um, having the best people on board, and then having the ability to produce. And remember, they are that I think that's what the brilliance of Tesla isn't just their AI. It's actually that they're probably the best manufacturing company in the world, and they can do it at a very low cost. There's a difference between a bot that they may have similar capabilities, which I actually doubt. Um, People are also discounting. Maybe they put the OpenAI into one of these other bots, but who's going to manufacture the bot and who can get there to scale? And then here's an interesting one. You hear some people complaining that Tesla is moving resources to XAI, and our argument has been initially we thought, yeah, that's kind of sucks. I'd like to have a part of that or a piece of that. Um, let's not forget XAI will probably be driving the AI in the Tesla bot. But just think of like the alloy
Mhm.
components that go into the Cybertruck, or the manufacturing techniques of making the bot, the genius behind even the alloys that they're doing. This isn't stuff that is just taken from Tesla. This is stuff that and some engineers that they've taken from SpaceX and other companies, right? Maybe it's Neuralink. So all these other businesses create this melting pot, and they're able to grab great, not just ideas, but technologies and share them across their platform. And Tesla really benefits from that. And I think that's one component that people are forgetting, that I don't think you'd have the cars where they are today or the bot if it wasn't for SpaceX and some of the engineers there.
Yeah. Thank you for that. Great comments. Just a small pushback on the other bots, and without underestimating how difficult it is to scale. You're absolutely correct. It's easy to make prototypes, very hard to make manufacture at scale. But when I've had this debate with a number of people about comparing it to the EV industry, thousands of companies came out, and then thousands are dying because they can't get profitability. And many are saying what you're saying, which is the same thing's going to happen with the bot companies. The difference is that in electric vehicles, the margins are very razor thin. And so they really can't afford to have, right? They have to have the cost dialed down as low as possible to even make any margins. And that's why only BYD is only one that's shown to be able to do this, and Tesla, of course. However, in the bots, the revenue that's going to come in is so much bigger than it is on the EV side, and the costs are actually much less, that even if they're like double the cost or triple the cost, they still make margins.
Yeah,
And so
yeah,
that part is like
yeah. I agree. Yeah,
so
I agree.
thousands
I
will
agree.
still die. Hundreds and
Yeah,
hundreds of robot companies will still die. I'm not saying that they aren't. I'm not saying it's easy. I'm just, when you compare it to the EV industry, it's not as straightforward. And also the other
yeah,
thing is that a car is one use case. Let's say 10 use cases, whereas a bot is, the unlimited use cases. And so if they needed to, they can just focus on one very specific use case. And now I'm going to do that. And then I'm going to survive, and I'm going to have my niche. So just, but I'm not in any way saying that Tesla's, in any way going to not be a major leader because of their skills. Um,
you're right. It'll be. I
yeah,
think it would be even similar to what we're seeing in the chip space today. Is that yes, there's one company that makes the
yeah,
best most efficient chips, but the demand is so high
So
that people
big.
can't get enough of them.
Yeah.
If you have a
Yeah.
humanoid robot that can solve real world factory issues, there's no way Tesla can satisfy that
Yeah.
demand.
Yeah.
And so you'll have a number of companies that can satisfy, despite the fact they're more expensive. It won't matter
Yeah.
because you're going to be saving so much money.
What you're saying is like, focus on Tesla. What can they do? And they can mass produce, and they can make the best bot and the best materials, the best intelligence. And then,
Mm.
so then the world is their oyster. Whatever they create, they'll sell. There's not going to be any rubbing of shoulders or fight, competing on the same market share with any other bot company for at least 10 years in my analysis. Just that, like you said, the demand is so big that they're not going to can't sell what
Yeah.
you make for that long. Tell me, go back to auto and energy. So we talked about full self-driving. We talked about Tesla bot. What's your analysis for the auto industry? We're seeing some slowdown per se, a slight slowdown, although the most recent report, surprise, surprise, Bloomberg research finally comes back and says that it's just a blip. There's the EV boom is a boom, and it still is exponential curve. And we're actually still going to see doubling of 2.2 million of EVs will be sold in the US compared to last year, 1.1. So, surprise, surprise, it's actually not a slowdown in EVs. But what do you expect for Tesla's auto business and Tesla's energy business?
So we'll start with auto. Yeah, I don't know if you read the report from, it was a Cox Automotive that
That's the one.
yeah,
Yeah.
okay, yeah, and they interviewed who's going to buy, who's most likely. Over 50% of people in the next 5 years said that they intend on buying an EV, and so that was a really very, very interesting report. I also follow Tony Seba and some of his predictions. He's been quite good. So the pandemic, let's go back a bit. The pandemic really messed up a lot of industries. If you look at, for example, the airline industry, you had all of a sudden all the airlines were grounded. They asked people to take early retirement. They laid people off. They did everything they could not to go bankrupt. And then within a year and a half, they said, okay, everybody go back to living their lives again. Pandemic's over. And you had to rehire, get planes in the air, and it was a complete travel disaster. I don't know if anybody tried traveling like after the pandemic. You couldn't go anywhere. Your bags were getting lost. Ticket prices skyrocketed. And so so the pandemic affected many companies in different ways. Peloton would be a great example of that. I don't know what I would do if I ran Peloton through the pandemic, a boom bust kind of case. So if you look at the auto industry, and I think this is one of the things that people were missing, is that the regular auto industry that we're used to, we're not talking about China, they move quite quickly, but in North America, and Europe for that matter, is most cars are sold through dealerships, right? And so what we're looking at is the demand. First of all, there was a chip shortage through the pandemic. There was higher demand. So actually, let's walk back a step back for a second. At the beginning of the pandemic, most of the legacy automakers pulled back and canceled a lot of orders, and saying, "Hey, you know what? We're going to a big recession here. Halt everything. We need to conserve cash. We're going into a recession." And then all of a sudden they realize, wait a minute, everybody's receiving checks and people want to spend money. And there's this massive demand for cars. Well, they couldn't supply that demand, so it was back ordered. I have neighbors that ordered a Lexus, and it took them like a year and a half to get it. I know Toyotas are really back ordered. And so the automakers, the numbers that we see from them are actually what they're selling through the dealerships. And a lot of people towards the end of the pandemic had put in orders for vehicles, but they were taking a while to get filled. And it really disrupted the auto industry. So it wasn't normal when we're starting to look at what we really need to do is look at inventories. And there are some guys on YouTube that do a pretty good job of that. So when you're looking, when I listen to the sales numbers from the legacy automakers, and they say, look, sales are good, I actually go, well, who are you selling to? Because you're not selling to the end client like Tesla does. Tesla manufactures the car and sells it directly to the client, and it does not sit on a lot somewhere in inventory. And but the legacy automakers are able to take that vehicle, sell it to a dealership, and they've wiped their hands, they've received the cash for it, and they show how many sales that they've had. But the problem is the dealerships didn't have any inventory. We have a few clients that own car dealerships, and even to this day they're saying they're just starting to catch up on inventory. Like they had zero inventory just 12 months ago. So the fact that the dealerships looked like they were doing really well last year, they said we're having another record year. Yeah, because they were fulfilling orders from the previous year. Okay, and so as those orders get filled, and all of a sudden people are saying, okay, now they're starting to put off the car purchase because interest rates are high. And I think that's really what's affecting the auto market. And I think it's affecting all of them, not just EVs. The reason that it shows EVs sooner is that EVs, Tesla, we're talking about Tesla today, they just sell directly to the consumer. And the consumer is starting to slow down. Well, what happens when the auto dealerships sell to all the customers who already made the orders, and now they're starting to build up their inventory? Okay. So I think that we need interest rates to come down. I think that Tesla's been pulling a number of strings that are quite attractive, like the 0% or 0.9% financing. I think they could do more of that. But yeah, we're in a tough market, macroeconomic market right now because interest rates are high. When interest rates first went up, we did the analysis of how much it costs for a car payment. Most people buy a car and they finance it. And it was really interesting to see that the rise in interest rates and your monthly car payment is almost the same as what it was when Tesla cars were 30% more expensive.
Right. Yep.
So the only thing they were doing was adjusting cars for people's monthly payment because interest rates went up. But nobody seemed to want to talk about that. I think interest rates will come down eventually. I think here in Canada, we're already starting to see it in the bond markets. I think they've peaked. I think Canada's in recession already. So you just have to remember that's short term. And I don't know exactly what's going to happen over the next 6 months. But if you look over a 10-year period, interest rates go up, interest rates come down. We go through recessions. After recession, we get growth. I don't think that's going to change. And Tesla is going to continue to drive down the cost of their vehicles, continue to innovate, and continue to just make a compelling product that's so much better than everything else. And then you've got the flywheel of renewal rates, right? So everybody who owns a Tesla after 5-6 years, they say, oh, you know what? I'd really like to have a new one. And they're just coming into that now. So they don't have to go out and find another, I don't know how many Teslas are on the road now, 5 million, 6 million. They don't have to find another 5-6 million. They're actually, a lot of those people that are already Tesla drivers, it's going to be like an iPhone cycle. Every 4, 5, 6 years, people are just coming back, getting a new one, selling the old one. So I think that's going to be the case for their auto sales. It'll be nice to see them ramp the Cybertruck. We don't have it in Canada yet. I put an order in the night that they announced it. It was in California. I was in Montreal, and I'm in bed with my wife, and she's like, "What are you doing at midnight?"
Bye. I just bought a truck.
They told me I've never owned a pickup truck before.
Yeah.
But when they showed the features and the cost and the benefits, I said, I don't need. I have to have that. That's the value is so attractive. I told my wife the next morning. She says, "You bought us a what?" and you know what? That's a really good example of what happened to that vehicle and what's happening. It's playing out how we saw, but it didn't affect the stock price as much. So it was very controversial. People today either love it or they hate it. That being said, the demand is off the charts for this vehicle. If you ordered one today, it'll take you probably 5 years to receive one. I don't know if there's still close to 2 million reservation holders. And this thing is blowing up all over social media. All the
Mhm.
big stars and name, like the
Mhm.
who's who, are driving them, taking pictures in them. It's crazy. I've never
Mhm.
seen this
Yeah.
happen with a vehicle ever.
Yeah.
This effect of ever. That's pretty exciting. And so if they can ramp this, and I I think that the numbers on that vehicle are quite conservative.
Mhm.
F-150 sells 1 million of those per year. Rams around eight, I think it's around 600,000, something like that. Anyways, the truck market in the U.S. it's the largest market, and I think they could be right there with Ford, or outselling Ford. Why wouldn't they sell 1 million of these a year? I think it's just going to be supply constrained.
Yeah.
They're as fast as they can ramp these. I think they'll just keep selling them. It's not going to be a 200,000 a year or 400,000 a year. There's a huge demand.
Nice. Okay, so final question is, what is your top risk for Tesla? Um, Jim Chanos famously kept repeating that it was over exposure to China. Of course, Chanos lost so much money and he had to close up shop. It's sad what happened to him, but this is what happens if you short Tesla. And then the other big one that's on the news quite a bit is keyman risk. Elon himself said, "What if I'm abducted by aliens?" Of course, there's the annual shareholder meeting come up, and you have told me that you voted the 300,000 Tesla shares in favor of those two proposals. How do you see the key risks?
In the short term, so if something were, I don't think that Elon will leave Tesla. I think he does
Mhm.
what he needs to do to get the job done. But I don't think that he would leave Tesla. I think if the vote doesn't pass and he doesn't receive his comp, or they're not able to their move out of Delaware and into Texas, I don't think it's over. I think that they will find another way to do it.
Mhm.
But let's say, let's say worst case scenario. I know there's a lot of Tesla investors that are worried that if Elon leaves, they won't be. He'll take all the best people and leave and go do something else. And I think that FSD is so far along. I don't think it would affect, and that's the next. I think that's the next leg up in Tesla growth is going to be FSD, and they're on the cusp of getting this, and the rate of improvement is so staggering, and the compute that they have, they're there. So, is this thing perfectly solved by August? Possibly. By year end? I think so. Whether Tesla's there, or sorry, whether Elon's there or not, I think it's too late. It's the horse has left the building.
Mhm.
It's done.
Mhm.
It's in the bag, in my opinion.
Mhm.
It's just, is this in a 6 month thing or 9 month or 12 month? So I don't think that's a tremendous risk. Regarding China, all of these things would affect Tesla short term, but if Tesla's factory were shut down in China, obviously it would have a negative effect on their cash flow short term. But it's still not going to affect the long term trajectory of the company, which is FSD, bots, whatnot. What I think, let me see, what would I say the biggest risk would be? Short term, the biggest risk, in my opinion, is that we come across some unforeseen roadblock with the solving of FSD. Right,
Mhm.
right now, the reason we have a reasonably high valuation on the company, because their car sale, the auto gross revenue is not growing as fast as Wall Street would like it to, but the stock still commands a relatively high valuation based on their auto revenue. And I think that's because people are expecting FSD to be solved quite quickly. And I do
Mhm.
believe, but nothing's for certain.
Yeah.
And like we've seen with previous, pre-version 12, there were times where they thought they nailed it, were about to nail it, and then they ran into another. I know this is a completely new way of doing things with the neural nets, and it appears that it's moving perfectly in the right direction.
Mhm.
But that would be my one concern, is if that's not in the bag like I think it is, and it takes them another, 5-10 years for whatever reason,
Yeah.
um, that would be my biggest risk, I believe.
Thank you so much. All right. Well, thank you so much, Simon. This is Simon Hale, and he's from Wellington Altus. That's wellington-altus.ca. Check out their wealth management firm. I appreciate what you shared today. You know, you gave a lot about your investment thesis, the way you think, the research you've done. You know, you rolled up your sleeves and you actually get down, you join these spaces, and you actually have your cars and you do, you know, really, that's why I need to buy the Cybertruck, because it's it's for business purposes. That's what it is.
Research. It's a tax write-off, right?
Yeah. And if you're on X, follow him there as well. Simon Hale 007, easy to remember. And hopefully you'll join me more in spaces. We need to have your voice heard, again, refreshing your perspective, and yet you can kind of bridge the gap between us retail investors and the institutional investors. Thank you so much, Simon. That was fantastic.
Thanks, Herbert. And Herbert, thank you for what you do. You bring together people from all different industries and expertise, and you help all of us get information from expertise in different areas, and we're able to come up with our own conclusions. So thank you for doing this and being able to bring on such great guests over the years.
Oh, thank you very much. Yeah, I'm enjoying myself. I appreciate it. Okay. Thanks, Simon. Bye-bye.
Thanks. Take care.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.